Welcome to the Money Tree Real Estate Investor Podcast, where we learn from real estate professionals across the industry. They will share about how they got into real estate, the big wins they have celebrated, the mistakes they have made along the way, and the advice they have for anyone following in their footsteps. Money really does grow on trees. Hey everybody, it's William Holland here for another episode of the Money Tree Real Estate Investor Podcast. I've got a special guest today, Dr. Hoa Nguyen. She's an
Hi, William. How
optometrist
are
and
you?
yeah, I'm doing great. I'm really glad to have you. I'd love to hear a little bit more of your background and how you got started on the real estate journey. I know it was a big leap for you.
Oh, yeah, absolutely. So by trade, my husband and I are both optometrists. I met him 18 years ago as a lab partner, right? And so we worked really hard, came to DFW, been here about 17 years now, worked for someone else, really bought our dream practice. But still, I mean, even being an entrepreneur and owning practices and being a doctor, it's like you work hard. And so we were still working 50, 60 hours a week on average. And especially having two practices, it was really busy. And so once I became pregnant and my daughter came into the picture, I was like, okay, there's got to be a way that we can work smarter and leverage our money and income from our practices to diversify our income and grow and scale. And I knew real estate, like we all know and hear about real estate creating and building wealth, right? And that was where we started our journey. Like 2016, I was like, okay, we got to start figuring out how do we get into the real estate game. And that's pretty much when we started like opening a whole new journey of learning all the different asset classes and how to start our journey in real estate.
That's so cool. Yeah, so I know you guys love to travel. What's some of the best vacations y'all have ever been on?
Oh my gosh, we've traveled around the world. Obviously we love, like, one of the places I did a girls trip back in 2015 to Belize. Absolutely fell in love. It's one of the islands in Belize and it's really close to DFW. So it was like really easy to get back and forth. But it was really behind on the times because it's like true island feel, right? And I was like, man. And so I go there probably every few months since I started going in 2015. And we started our investing journey actually started in Belize. But we take our teams there, we take our families there, we go there every few months. And like my daughter, she's 8 now, and that's her second home. And so we've created a lifetime of experiences there, but then also been able to grow, an Airbnb where we can actually cash flow while we're not there. Aside from Belize, I mean, we just came back from Japan, visited my brother there for 2.5 weeks, loved Japan, loved Singapore, Malaysia, Vietnam, Europe, lots of places in Europe. My daughter, I had her we honeymooned in Athens. And so we really loved Athens. And so we were like, if we have a baby girl, we're going to name her Athena. So my daughter's name is Athena.
I love that. But she's a cutie.
Oh yeah, she's a ninja for sure.
That's funny. So, with you having land in an area that you like to travel to, are you able to write off those travel expenses and costs while you're there?
Yeah, part of it, obviously, because we own multiple things there and we go back and forth so that we can actually check on our rental. We do have a management company that helps us boots on the ground there, but we go back and forth both to vacation, and then part of it is because we actually have our 3 parcels of land. We have part of a resort there. And so we're always boots on the ground, checking on the property, meeting with our management company, and meeting the team there. And so, yeah, part of it is work. And so not all of it is you can write off, but part of it, whatever's work related and the time that's truly work related, to our assets there.
Absolutely, that's really cool. Okay, so you bought some lands, you developed it. What was your experience in building that home?
So that was a process. It's definitely island time. And, we were the very first one on that raw land, for us to be the first one to buy and the first one to build. And so going through the process of just the permitting process and getting, going back and forth between the contractor, the architect, getting the permits from Belize. And so what we thought would take about 8 months took about a year and a half to build out, so it was definitely longer for construction time. But then after it was done, I mean, then we were able to enjoy it. So it's just the duration. But other than that, it was fine. It was just, it took longer than anticipated, which,
Hmm.
most new development, you have to incorporate that in.
Oh yeah. Oh yeah. I don't know if you knew or not, but my background is in large scale commercial construction. So I got to help build a
Oh,
26-story building here in
oh
Uptown
wow.
Dallas. So
Oh
I'm very familiar
wow.
with construction and the different pain points.
Yeah. But it was fun because we got to custom. It was our very first investment in the world of real estate. And then it's in another country. We don't know anything about development and construction, right? And so we were learning the whole process, working with the architect and then picking all the different details and like, so going back and forth constantly, right? To the minute details of building this home and then hiring an interior designer to our taste to make sure that it really fit our taste, because for us it was going to be a legacy asset. We named it after my daughter, and so I was like, this is going to be something that we're going to hold on, we're going to be able to enjoy while we're still living, and then once we're gone we'll pass it down to my daughter and we create a lot of experiences in it. And so we figured like, hey, if it didn't make, worst case scenario, if it didn't make money, it's our second vacation home.
Yes. I love that so much. That's really cool. So now that you've got a development under your belt, I know you're also passively investing in some deals and raising some capital as well. So what was that journey like? And what's some advice you would have for people just trying
Yeah.
to go down that road?
So once we started learning about multifamily and the whole world of syndication and being able to own like these large apartment communities and being a limited partner where you can truly be passive, I mean, that was a game changer. I'm like, it sounds too good to be true. And so my husband and I were still working full time in our practices. I was like, man, we can't just let our money sit in the stock market and bank. It's not doing much for us, right? And it's too volatile in the market. And so we're like, man, once we started learning and creating like relationships and learning some of the people who were experienced in the space, and I was like, man, this was a game changer. We did 8 passive deals, of those passive deals, 4 of those already have gone full cycle, right? And gone above and beyond what pro forma was, but the market's been good. But I was like, man, you can really, as a passive investor, get the cash flow, you get the appreciation, you get the tax benefits. I mean, that was the biggest one for us because I was like, we're high income earners, we're doctors, right? And this is for a lot of people who are they're professionals with high income. Taxation is a big pain point, right? And so the taxation, I was like, oh, there's this cost segregation. And then I learned about accelerated bonus depreciation that you can take on year one. And so we were like investing 100,000, sometimes 200,000. And the K1 would be like a negative 90,000 or a negative 172,000 on the first year. And I was like, oh my gosh. And then we started learning about, man, the scalability of it, right? Now we don't have to just we can be in Texas, we can be in the Carolinas, we could be in Phoenix. We could really diversify our portfolio of multifamily and get to know the different operators and the different markets. And because our goal was to transition to be general partners ourselves, but we started as limited partners so we could really understand and see how it all worked. But I was like, as a passive, I was like, man, somebody else is doing all the work. You leverage someone's experience, their resume, their work, and they really have all the liability, right? They're doing all the underwriting, the heavy lifting, they put in the hard money, and they do all of that. And as a passive investor, it's truly passive. And so I was like, man, this is beautiful.
Absolutely, yeah. So you mentioned you've had 4 deals go full cycle. So for those listeners that may not be familiar with what that means that you were a passive investor, the deal closed, they did operations, they improved the operating income and added value to the property, and then they sold it and returned your initial investment plus a nice profit as well. So I'd love to hear a little bit more about those 4 deals. What markets were they in? What size were they? What property class? And just some of the metrics.
Yeah. So out of the 4, 3 are based in DFW. And then the one was in South Carolina. The one in South Carolina was 122 units in South Carolina. It's in Malden, which is right near Greenville. And so it's kind of an emerging market, but it's a booming emerging market. It's a B- class. It was pro forma to close to double. The pro forma was to be about 90% total return in 5 years was the pro forma. The actual of that wound up selling in 2.5 years. And we were able to get about 80 to 81% total return in that 2.5 year period. And so that was really nice. The three here was a C class, and the 2 other ones were a B class. The unit sizes were, one of them was about 165 units, and then the other 2 were 260 something. They're a little larger.
Pretty large. Yeah, those are big.
They're large. And then the other one was 280 something. They were bigger properties. But again, those actually really did well. One of them, we did 133% total return in a 2-month period. So that was like the best one we've had in our portfolio that went full cycle. And then the other 2, I want to say we had about a 76% total return in about 2 years.
Awesome.
And so, yeah, so most of them pro forma is close to double in 5 years is pretty standard, right? 90 to 100%, something close to that in a 5-year period. And these were all happening within a 2 to 2.5 year period.
Right. Yeah. So it's nice to get your capital back a little bit quicker and then be able to hopefully deploy it again
Oh
and
yeah, and
just
so we
continue to grow that.
continue rolling it, right? And it's like you get all that money back, and then we continue reinvesting it and diversifying it into other projects.
Absolutely. So when you say a 76% return on investment, would that be a 1.76 equity multiple?
Yeah, 1.76 equity multiplier.
Yep. Awesome. So that's great, and it's happening quicker than 2 years. So that's phenomenal.
Yeah.
2.5 maybe. So now that you've transitioned into an active investor, what are types of things that you are adding value for the team?
Yeah, so I focus on a few pillars. I'm actually one of those who does all A to Z. Some people kind of just stay only in one area where they only capital raise, or they might only underwrite, or they only asset manage. When I started my journey of multifamily, I really wanted to do and learn A to Z. Not to say that I would stay and do A to Z, because you can't scale doing all the parts, but it was really important for me to understand all the roles from A to Z, just because that way I know how to vet other operators who I want to partner with, right? And so that was really important for me, and that was a different role for me because I've always partnered with just my husband. And so raising capital, and when it went to other people's money and people trusting their money for us, that was a huge undertaking. And so I really wanted to be well versed in learning the true business. And so, but Jaime and I, we focus heavily on acquisitions. We do underwrite a lot of our deals. We source our deals. We go out there. We get to know the brokers. We do rent and market analysis. We walk the rent comps personally, and then we tour it. We submit offers for. So the acquisitions were always in motion. The second pillar we're very strong with and always are actively doing investor relations and raising capital. I mean, that's an ongoing process. So all our deals, we raise capital, and then we partner with others if that's something we can add value to other teams who may need help with the capital stack. And so obviously the lending part is a huge part of the equation in the multifamily space. And so with lending, having the net worth, having the liquidity, having the multifamily experience, and having the equity, right? And helping on the front end with the earnest money and the attorney fees, the lending and all of that. And so we're able to help with all of that. If we're partnering with someone, we can help with all of those equations. On the asset management, we co-asset manage a few of our properties, especially if they're here locally in Dallas. We're never the lead asset manager because that does take up a huge, huge role. And so we do like to partner with those who are more well-versed in the operations side, executing out the business plan, overlooking the management company, really, really getting into the minutia of the financials. That's super critical. And so we do always want to partner with someone who does a lot of that. So, although we are part of that every week and things like that, we enjoy, and our strongest that we bring to other teams are the acquisitions part and the capital raising.
Certainly. So who's your avatar? Who you're trying to raise money from?
So it's a funny question because I get that all the time, right? And so our investors, most of our investments are a 506B. And so, we only probably have done 2 506C projects. And so most of ours are very relationship driven people, and it's all walks of life, and so being that not everybody has to be an accredited investor when you do a 506B, it really opens up the doors to a lot of people who have they're small business owners and they have a lot of liquidity, right? They have cash that's sitting there, they're business owners, but they don't quite make the criteria as an accredited investor per se. And so we really, although definitely we're doctors, and so a big pool of our investors are all types of doctors and professionals, health professionals from all walks of life. We have a lot of engineers. We have a lot of small business owners, who even people who do my nails, who do my hair, who are teachers. And so they're all walks of life. So you can't really quite so it's a lot of entrepreneurs from all walks of life, and they don't really fit a certain type of income per se, because most of them can come up, or they have in retirement funds, or they have somewhere 50 grand. Most of them will have some of that diversified somewhere. And so they're like, yeah, if it's 50, I have 50 or 100 or whatever, right? But our biggest whale, we call them whale investors, people who easily will put 1 or 2 million. Those are going to be high income earners who are, high class doctors or like CEOs or something like that of big companies. Those are going to be our bigger investors. But for the 50 to 75 or 50 to 100, it's really all walks of life.
Passive investors in real estate are able to receive a check every month. Some people call that mailbox money. We say money really does grow on trees. Visit the website at biggerpictureholdings.com, where we have a ton of free resources to help you learn more about planting your very own money tree. So what's been the biggest struggle in capital raising for you?
Capital raising, it depends. It kind of depends on the timing, right? And when people get a little bit, they always say there's a lot of dry powder out there. And there's a lot of people who have money that plenty are stashed in the stock market, or they just have money sitting in the bank because they're scared of what's coming, right? And so just the part of educating. And so we do a lot of our time is spent personally educating our investors, and we want them to be comfortable. And so one of the challenges, not so much challenges, but it's the time. And so for us, it's always been quality over quantity. And so, but we spend that extra time, and now we've hired on help to help us, because obviously Jaime and I alone can't scale and take care of everyone properly without help. And so our team starts to grow. And so we hire on help for investor relations so that we can educate people and walk them through the process. But that's the biggest thing, is people have money. They just need to have the proper education and how everything works, how to vet the process and get over that fear, right? Because it sounds too good to be true. And I was one of those. I'm like, it sounds too good to be true. How can you have these kind of returns as a passive investor, right? And so I think getting through the education and the hurdle of like, man, once you really see the money coming in and you're like, and then you're like, man, I wish I would have started so much earlier, right? And so you get
Hmm.
excited to educate other people. But then when you're first timer, because I'm one of those, I'm super conservative. And when I was learning about this multifamily thing and all this passive investment, I was like, man, this sounds too good to be true. What's the catch, you know?
Hmm.
And so that's kind of the challenge, not it's just the proper education and walking people through it. And so that takes time. It's planting seeds, it's building relationship. People have to know, like, and trust you, right? So that takes time.
Absolutely, yeah. And one thing that I've ran into is people don't want to give up control. So I talk to a lot of people that do have a lot of money sitting in the bank or a lot of money invested in other types of real estate, but they're controlling that themselves and they probably are getting better returns. I'm not going to lie about that. But one thing that people don't have a firm grasp of is the opportunity to leverage someone else's time and resources and skills. Like you're not just leveraging your own finances, like you are gaining back time because you don't have to go and do all the work on this.
Right.
So all of that money that you made in those deals was truly passive, and you let somebody else, it's essentially like you're hiring somebody to work for you and they're gonna make you a
Right.
lot of money. It's, I mean,
I
why
hire
would you
you
not
to
want to
make
do that?
money, to grow my money for me, right?
Hmm.
Yeah. And
Well, that's
so,
awesome.
that's the beauty of at least the passive side of it, right?
Absolutely. So what's some of your lessons learned, and some things you'd like to leave listeners with?
Lessons learned, in the real estate world, you have to do your due diligence. I mean, you have to get educated yourself and how to, and so I truly believe in investing in yourself. And whenever you're learning something, I go deep and narrow. And so I really, when I want to learn about multifamily, then I really, really dive deep into that space or whatever asset class of investment that you want to invest in. I think it's important to know, because the more educated you are, the more that you can ask the right questions. Because if you're not educated, not only do you not know how to vet a sponsorship team or a project or a market, but you don't even know where to begin to ask the right questions to be guided to get the resources, right? And so I say ask questions if you don't know. It's good to ask questions, but before you go and ask questions, go and do your due diligence, go study, go read, go listen. And that's great that you have podcasts like this where you bring in different people and you get to hear different sides. But I always say you have to do your due diligence, your own due diligence, right? You can't just take it as that. But if you're not educated enough to know, as a passive investor, I think that's one of your biggest things is making sure that you are, because you bet on really the jockey, right? It is you're betting on who's operating and running the show, right? And so you want to make sure you are partnering with a good team through markets like this, where you're just not riding the good times anymore. Lending is getting stricter, interest rates are going on higher. And so you have to understand, what does underwriting conservatively versus aggressively even mean? Does the team have operational skills that's where times get tough that they can execute and carry out? Is it to the right? And is the communication and transparency clear? And so those are things that, you learn through the journey. And I've learned a ton through the journey of how does a person communicate and how transparent things are going to happen. It's not all glitz and glamour with real estate. I mean, right? And so things happen. Texas winter storm, things burst, buildings get, there's fire, there's unexpected things that will happen on your property. And so how things get taken care of and how well prepared the team and how transparent that is communicated from the sponsorship or general partners to the passive investors. I think that's really important.
Absolutely, yeah. I'm glad you brought up all of those things. It is so important to understand track record, and even if you can find some of the investors from their previous deals, and understand how they
Talk to them.
communicate, and their high level of reporting and those types of things. And another thing I think to think about too, a good question to ask sponsors, because when you're looking at slide decks, you're gonna see, hey, this deal performed above, this deal performed above, but I think it's fair and wise to ask, hey, what are some deals that you had that didn't perform as well? What deals have you had that didn't meet the pro forma expectations, and
Why?
tell me what you learned from that, and maybe what went wrong, or what wasn't thought about.
Hmm. No, that's great. That's a great point. So track record for sure is always, and not just the good, like you said. And a track record means all good and bad, right? All your properties,
Mhm.
how they performed. But
Absolutely.
yeah, and if something does go wrong, like it underperformed, well, why? What are things what you would have done differently, or things like that.
Certainly. So let's take a hypothetical for a second. So say we've got our sponsor picked, and they've got property acquisitions in a few different towns. How are you researching your markets, and what are things that you're looking for to key indicating factors of why you would want to invest in a market? And obviously you're invested in Dallas, and why do you like Dallas?
Yeah. And so some of the key economic drivers for us is to make sure that there's good job growth and population growth. And obviously, we're boots on the ground here in Dallas, so we know this market very well. But Houston and Dallas, number one and number two in job and population growth, but not just the bigger market in general, because within the sub market, it's super important because DFW has very different sub markets that perform very differently. And so I think you have to get up in the minutia of like, hey, what's the median household income right within that vicinity? What's the school district like? What's the employment diversification of that immediate area? What are the comps around that area? What's growing and what's future development in that area? And so you have to get into the minutia of the sub market and not just like, hey, yeah, Dallas is a great market. No, not really, not all the time. It could be, most of it is, but if you're in the wrong neighborhood and then there's high crime and there's a lot of delinquency issues or management issues and things, and so you have to kind of get into deeper area of that, because we find that you can find an area within the submarket, even if it's a say a C class, but it's in a B area, and you see really new growth and development and change in that area, then that's great, right? And so even if it's an A class, but it's not in a good location. And so we always talk about location, location, location is really important. And those economic drivers, right? You can't just make a building pretty and raise rents and expect that you're going to hit those rents if the demographic cannot afford the types of changes in which you're putting in your business plan. It's not going to work. And so you really have to consider, right, what type of demographic is living there, what's their household income, and in your
Mhm.
5-year projection and plan of having these renovations and rent growth, can that really be realistic, and can that demographic support it? Right. And so those are deep things that we look at in any market, whether it's Carolinas or whether it's Texas or whatnot. And then even like in Houston, like flooding is a big thing. And so we've got to be really careful that it's not in a flood zone or floodplain.
Mhm.
And and then you got to take into account insurance and stuff like that, right? And so those are all factors you've got to like, hey, within that particular market, what are things I need to be aware of? What are the natural disasters? What are things I need to take into account, whether it's insurance, whether it's property taxes that I've got to embed in because I know it's a little higher or whatnot. So those are things you've got to be aware of. But yeah, that's what we kind of look at when we look at markets. And we always want an asset manager that's boots on the ground who can be right by the property. I think that's super important. If something happens, that they can have not just your management team there, but someone on your actual GP team that can be close by, that can just go over there and have physical eyes and look at the property and be close vicinity overlooking the management team. I think that's really important too.
Absolutely, yeah. And with my background in construction, people will always tell you what you want to hear. And so
Yeah,
you bring up a good point. If somebody has boots on the ground, then they can go verify. That we like to
absolutely.
trust, but we also like to verify. because
Absolutely.
people have no qualms for lying and saying stuff that's been done a certain way and doing not doing it at all or trying to cut corners. So I think yeah, boots on the ground is very important.
Right. Absolutely.
Definitely. So
And then
the
the
last thing
person, I'm sorry, go ahead.
oh,
No, I said it's really important and it's good aside from just physical eyes on the property, but that person, if they're boots on the ground or they live in that market, they understand the inner workings of that market more, right? And so I
absolutely.
think that's what to have. Yeah.
Definitely. So the last thing I'd like to cover is just give you a platform to hype yourself up, talk about your proudest accomplishments in real estate so far, and just some of the things you're excited about for this year.
Yeah, so our journey of real estate, I mean, we had never imagined coming into the world of real estate starting, even just in 7 years. I mean, we used to work 50 to 60 hours a week, didn't own any real estate at that time. And now we've invested in 27 different apartment communities to be able to have 7,300 units. I mean, all through the world of syndication, we've made tremendous amount of friendships and partnerships, and helped so many investors, right, be able to grow their money now. And so it's really nice that a lot of people who don't even know about this type of asset class, to be able to do that. And a lot of our money, my husband and I, we love to travel the world. We're really into doing a lot of charity work. And so now that we're able to not be more, we've been able to attain financial freedom. I go in twice a month in my practice by choice. And so the real estate world has really allowed us true financial freedom in money and time. And so work for me is optional. And so the past year and a half, I've really just been speaking on stages. I've done a lot of charity organizations. We've been able to do initiatives to go lecture with underserved communities. With like human sex trafficking is something huge that like we're part of that, and it's just a lot of, but it's because the world of real estate has opened up a whole world of self-development for us. We're able to be in proximity and masterminds with people that we would never have known or been able to get our foot in the door. And so it constantly is like the more you have, the more you become and the more you give back. And so our real estate journey, it's just been really, it's not just the amount of assets or number of doors. I mean, that can be very like, that's so great on paper, but to truly live life, like, and to have the freedom to do and just like fully live. And it's like, it's nice when you have a choice and then you can just help others along the way with you. It's not like you're just creating wealth for yourself, but you get to bring other people alongside you, right? And elevate their growth journey in the world of real estate. So it's been a phenomenal journey. I've been super excited. I love it. Like people say, why don't you just go chill on the beach in Belize? And like I could, but I'd be bored to death. Like I love this, right? And so
Hmm.
the more, and I keep learning about real estate, and now we're doing new land, we're doing land development. We've got a new project now. We just bought 21 acres of land north of where we live here in Salina. And so now we're going to build a 336 unit multifamily. That's our first new development project in the multifamily space. And
Oh
so
yeah,
we've got to meet a lot of new people. So it's like, man, this is like so exciting.
I love that. That's so cool. Thank you for sharing.
Of course.
Well, it's been great
Thank
to
you so
have you
much
as a
for
guest
having me.
today.
Thank you so much for having me on, William.
Like and subscribe below. A new episode will air every Tuesday at 7 a.m. Are you looking for more content? Visit our website, biggerpictureholdings.com. And remember, money really does grow on trees.